quickly introduce our guest for today evening. Chakri. Chakri is the CIO and MD at TCG Asset Management. Chakri has lived and worked in New York, London, Paris, and India, and holds an MBA from the Stern School of Business from New York University. In his 24 years plus career, he has held top positions in some of the largest investment firms like JP Morgan, BNP Paribas, and Franklin Templeton. So, a big market voice, someone you would look up to in these volatile times. So, awesome having you, Chakri, and thank you so much for joining us.
Okay, thanks, Yash, and thanks, Ashwin, for having me. And I really look forward to tuning in. And thank all those who tuned in on today's Twitter Spaces.
Awesome. Chakri, every finance website or newspaper is talking about recession, bear market, and rising interest rates. But on the contrary, restaurants and malls are going full. Air tickets and hotel stays are barely available. What do you make of this dichotomy, and which side of the fence are you on?
Okay, I think it's a very important question, and if you look at the present India or the global economy, does not resemble anywhere close to what is considered a cyclical normal. A pandemic is not normal. A war is not normal. And therefore, trying to estimate a downturn or a recession on the models of yield curves and inflation curves of the past, I think will lead to mistakes in for both the economy as well as to investing. And as you rightly said, uh, now we are in a situation where first thing what happens in a usual recession, people spend less, but now people are spending more because they're coming out of a pandemic. Second, usually ahead of a recession, unemployment rises. But the opposite is happening now because pandemic lockdowns, people sitting at home. Now the companies are opening up and therefore hiring is happening. Third, supply chains were really in a tight spot. They still are because of the war, but they're kind of normalizing. So people are beginning to go out and buy things. So therefore, how we invest and how we look at the economy has to be therefore very different because what we're experiencing is very different from what's happened in the last 100 years of investing.
Chakri, the past couple of weeks have been kind for the markets. Are you seeing signs of a possible reversal, or is this a sell on rise kind of a market, according to you?
The biggest bugbear is oil. Now, oil has a snowballing effect on inflation, and inflation has a self-fulfilling prophecy about it. Expectation of higher prices in the future makes a consumer spend more in the present to avoid the higher price of the future, therefore leading to a higher inflation in the future. It's kind of a convoluted logic, but there is a circularity, and therefore, what can resolve, of course, the big thing is if the war ends, then blindly go and buy because it will ease up supply chains, it will bring down oil, which creates inflation, and therefore everything will look nicer. On the other hand, if there is the uncertainty when we don't know how long the war is going to take, then one needs to therefore look at what will be least impacted because of A, supply chain problems, B, the commodity inflation, which has input effect on just about everything because of the war. See, one of the things one needs to remember here is something very simple but very important. Companies are not making higher profits, but
Mhm.
the consumers are buying those products at a higher price. So who is making these profits? Nobody. It's because companies are having higher input costs, they're selling it at a higher price, and consumers are buying. So therefore, you need to therefore look at it in a different lens than we did in the past.
That's a very important point, Chakri, because in the commodity basket, I think the highest weightage will go to crude, and we saw a sharp fall overnight of 10%. How do you see this developing? Because there are so many contradictory report. One report that says it could hit $380. There's another foreign brokerage which estimates it at $60 per barrel. The range is too wide. How do you see crude shaping up?
That's a a multi-billion dollar question, which is simply because, if the crude, falls because on fears that there's going to be a recession and therefore lower demand, then that's a bad thing. On the other hand, if crude falls because there is more supply of oil coming into the market, therefore bringing down prices, it's a good thing. But unfortunately, right now, crude is falling because on fears that a recession is around the corner. And so that is not really positive for the market or the economy, because one really doesn't know whether in 2 weeks from now crude will go back up to 120 or $130. Uh, so then what do you then do? You then have to kind of not look at the reason why crude is falling rather than the fact that it's simply falling.
All right. So in that case, Chakri, any pockets of opportunities that you are looking at currently, and any reason that you can explain to go with it?
Yeah, surely. You mentioned at the beginning that people are beginning to go out and spend. So in fact, there lies, I think, the answer, which is in a usual recession, we talked about people will spend less, but now they're spending more. So which means consumer discretionary. Now, usually the higher end of consumer discretionary, which is, let us say, a Taj hotel, so which means Indian hotels, or chalet hotels, which are, they run the Marriott hotels. Now, they are the higher end of the curve. They usually don't cut down on their spending, and therefore those companies who cater to them will do well. Second, consumer regular appliances companies, simply because people haven't bought anything for the last 2 3 years. There companies like Crompton Consumer, Havels, which all benefit from some appliance sales. So that is, for instance, one pocket to look at. So I think that's the way to I would we are approaching it, is looking at what will happen despite a war, despite the uncertainty of how long a war will last. What are the companies which will do well? Now, for instance, coming out of the pandemic, next sector is hospitals. They again, because of pandemic, etc., did not do that well, but now the occupancies are going up. So that's the way we would approach it.
Hey, Chakri, good evening. Ashwin from the Business Insider India team, and it's a delight to have you plug in and join us today. And while Yash really talks about the markets and the indices and scripts, I really want to chat to you about the behavioral aspect of investing itself. And given the pandemic and given the war, I mean, this kind of volatility is really not something that a lot of investors have experienced at all, especially those who have been seriously vested in the markets. What do you see as some of the common mistakes that people do or are doing right now amidst this space? Which hopefully you want to, give them a good word of advice or two and help them correct their ways.
Indeed, I don't know whether I'm qualified enough to give advice, but what we are doing is, in terms of the behavioral aspect, is clearly, like you rightly pointed out, is the most important thing. Uh, you look at today, a consumer or a corporate. A consumer is far more healthier balance sheet wise because they didn't spend much over the last couple of years, have the ability to spend. Second, a corporate, they fix their balance sheets, therefore they have the ability to withstand. So the on the other hand, banks also have repaired their NPAs, and they're also in a far better shape than they were, let's pre-pandemic. Now, if this is the backdrop, what is that you would normally normally what happens? You'll say, "Hey, let me look at a company which is trading at a low multiple because it looks like a value stock." But there are chances that the profits of those companies are going to go lower, therefore value doesn't remain value anymore. Then on the other hand, people say, you know what, these are uncertain times, so let me go and buy all the blue chips.
Right.
But guess what, blue chips are trading at their peak multiples. So uh, when they're trading at peak multiples and the economy reverses this current slump and starts going back again, usually statistically, mathematically, there is a mean reversion. So which means the stocks which are already at the high end of the curve will revert to their averages, and the bottom end of the curve will move up. So this is the time not to be, fixated on saying that I'll buy the bluest of blue chip, but buy
Right.
those where you see accelerated earnings growth.
Got that. All right. I'll make sure that we reiterate on that last part. Yash, you want to come in?
Yeah. Um, just to extend on our conversation on sectors, Chakri, up until a few months back, everyone was talking about a commodity super cycle, and then we know how things have panned out. Most of these metal names, they're down 30, 40, 50% from their all-time highs. How do you see this space? Is it a complete no-go?
Commodities have gone through a combination of both
Mm.
what's happened politically and therefore impacting the company. For instance, politically, yes, by restricting the export of steel exports and other commodities, that has brought down the profit margins, which was not there in the scheme of things in the forecasting 2 months before. And therefore, there was a cycle, and there was going to be good profits. They brought down their debt, but because of this, their profit margins have suddenly eroded. And so that the second, the on China going into lockdown, opening up, China going into lockdown, opening up has also created. So now in that space, therefore, commodities, wherever there is a government risk, for instance, you've had the windfall tax. Again,
Yeah.
this is completely unusual. So all those companies, even though they look value, I would stay away from. More the individual refiners. For instance, a conglomerate company like Reliance is better placed. But the pure OMC companies, they're in a worse off place. The pure metal companies where there is a government restriction are in a worse off place.
All right. You mentioned about how you're bullish on hotels, electricals, and FMCG names, as well as hospitals. Any other pockets that you find interesting, or rather, which are the sectors that would be a complete no for you at this moment?
One is clearly commodities as a sector is clearly because of the new all these changes we just discussed. Clearly, would stay away from. Stay away from companies where they have huge input material inflation. Companies like cement as a sector, they still
Mm.
have problems. Coke is still at a very high price. Fuel costs are at a very high price. So while their valuations have corrected, there still is an issue. Then banks, the high end banks, the bluest of the blue chip banks, the valuations of those banks have not really come down. Uh, so it's not a complete no, but they're clearly, because they're blue chip, they'll tread water, but it's unlikely to make money or deliver outperformance. So I think so. Energy is a challenge, metals is a challenge, OMCs is a challenge.
Chakri, how are you looking at what's your sentiment towards gold at this point of time?
While I'm not a gold expert, I would say that if historically any uncertainty has always been for the at the benefit of gold, and also with the rupee falling versus the dollar, a consumer in India of gold would benefit from the rupee fall as well as the overall inflation uncertainty.
Do you want to just quickly comment on the rupee falling itself in the sense that the last couple of weeks have not really been pleasant? Where do you see this getting rationalized over a period of time?
The one of the biggest things about currencies are, very simply, I look at it rather very simplistically, and that kind of works in the sense that if a country's economy is accelerating, that translates into increased tax revenues for the country, and reduces all kinds of deficits, and therefore strengthens the currency. Now we are in an opposite cycle where, because of high import costs of crude commodities, is increasing deficits of the country, and it's eating into the foreign exchange reserves of dollars. And third, by having the windfall tax, by banning exports, by banning steel, one of the things it has an unintended consequence of that is it reduces foreign exchange inflow into the country, export revenue brings in dollars. So the combination of all this plus FPI selling, foreigners selling out of Indian markets, is likely to make the rupee weaker over the coming weeks and months.
Chakri, you mentioned how you would stay away from sectors or companies where there is high input uh, cost relation. Any take on the auto names, because they have done supremely well in the past couple of months. In fact, the autos have been one of the biggest outperformers. Do you, by any chance, have a bullish view or any take on the space?
You rightly pointed out autos have done well, but I think they will continue to do really well for the simple reason that if you look at the volumes, whether it's bikes or cars or any vehicle, all the volumes, sales volume, are still lower than 3 year ago volumes. So, which means clearly the market has not heated up in terms of the demand is still is not at a peak. uh, the demand has not even reached pre-pandemic levels, and mind you, 2019 in itself was not a very strong year for the autos. So, which means volume, and now with post-pandemic, consumer wanting to buy, corporate wanting to buy, that's a positive. Input costs going down, metal costs going down, commodity costs going down is a positive. And third is, just about all the big auto companies have electric vehicle plans, which is a huge positive secular growth. So I think a combination of all this is positive for autos.
So is it safe to assume that you are bullish on the EV space?
Indeed, I think EV space, because for obvious reason, penetration is still very low. The slowly increase over time, and all the big auto players, whether it's Hero Motor, Bajaj, TVS Motor, all these guys have established distribution networks, established places to repair the vehicles, service vehicles. And now, so when you replace the ICU engine with an electric vehicle, because ICU engines are not going away for the next 10, 20 years, it's going to be a combination. So, in that mix, these guys will have access, the big established guys will have access to technology, and therefore will benefit.
And I presume that
Chakri,
the big benefit is also the fact that if the battery swap does get implemented, which means that that's going to be a big fill up as well. But do you expect some amount of plateauing out there, because by the time the companies are able to scale up and bring that standardization into the space, do you expect a bit of slowdown in the space?
You're right in your observation about the standardization, because standardization is something which not just India but Europe, US, everybody is grappling with. Tesla has its own network of charging stations, whereas now there's also swapping coming in other countries. So this will have to go through its trial and error basis, but that will not kind of impede the overall growth trajectory if you look from now to 10, 15 years later. Because it's not just the batteries and the chargers, but also the fuel itself. Because end of the day, still it's a combination of fossil fuel still fueling a electric car. It's not green energy charging an electric car. So until this balance is achieved, there will be stops and starts, but the growth outlook is strong.
That's one of the biggest ironies in this space, though.
Yes, indeed.
Yes.
so Chakri, is it safe to assume that your top bet from the auto space would be Tata Motors, considering it has almost 80% market share in the passenger car segment?
Tata Motors is actually clearly a good bet for the simple reason it's a very unique company, not just in India but also globally. It's a company which caters to right from the luxury end, the Jaguar Land Rover, to the lower end cars. It has the strongest. It also has commercial vehicles. It also has SUVs. So it is a mix of both luxury as well as common man. Then it is also a good mix of between ICU engines as well as electric vehicles. They have one of the strongest EV lineups. They have, I think, about 11 different models for different pocket sizes. And three, their balance sheet is getting stronger by the day. And fourth is not export revenue. They have factories in different parts of the world. So they actually have foreign revenue versus export revenue. So that places them well in the global market as well as the local market.
Yeah, and it's also interesting because just a couple of days back, we heard from Tata Motors that they plan to sell 1 lakh electric cars in the next 2 years. And if you see, that would be a big, big growth because in FY22, they did almost 5,000 car sales. And in this year, they expect that number to grow tenfold to 50,000 and then double from there to 1 lakh in the next 2 years. Unfortunately, compared to the other names in the auto space like Eicher, TVS, Maruti, Tata Motors has been a bit of a laggard, at least in the recent few months. But let's see. Also, Chakri, I really want to get in your thoughts on the difference in play. So, on one hand, we have Tata Motors, which is saying that they'll invest $2 billion. They'll create a dedicated line of electric cars. They hope to earn almost 25% of their revenues from the EV business. On the other hand, you have the current market leader in Maruti, which is saying we still aren't fully behind this EV story, and they're planning on going heavy on the SUV side instead. Today there was an announcement that they would be launching a new car on July 30th, rumored to be the Jimny 4X4 SUV. How do you see this space?
Maruti is as a company, as you rightly pointed out, their EV plans are clearly not articulated well. But I guess it also comes from the fact that, even if you fast forward 5 years, 7 years, 10 years, still ICU engines will be the predominant sales, whether it's passenger or commercial vehicles uh, around the globe, not just India. So, which means any company would not take off their focus of ICU engines. Second, I guess, in terms of, there is this talk about various Japanese companies coming together in investing for a joint EV business. Maybe that will, Maruti has some of that, and therefore they're delaying their overall plans. Third is, in the short term, because the short term, at least in the medium term, because car sales, etc., have been weak, and with the yen movements and the input costs coming down, I think they are well positioned simply because they have underperformed in the last couple of years, and they're still the leader in terms of sales, so they will do well from that perspective.
All right. We've actually discussed autos at length, but Chakri, I want to get in your thoughts on the IT sector. This whole fears of recession in the West, pushing all these companies down 30-40%. Your blue chip names like TCS, Infosys,
And it's earnings season as well. So yeah.
yeah, and the earning season is up next as well. Do you think that all these concerns are adequately priced in, and are IT stocks looking attractive to you right now?
Yes, indeed. I think IT is looking attractive because, as you rightly pointed out, all these stocks have corrected 30-40%. And now, in case there is a recession, we still don't know that. I mean, people are talking about a 30-40% probability. Now, in a recession, and information technology increases productivity because it helps in lowering costs, helping automation, and so therefore its earnings of an information technology services companies are far better protected than other sectors, than let's say a manufacturing sector. And in the case of an Indian IT services company is very different from a foreign IT company, because let's say a Microsoft is a product company, Apple is a product company, Facebook is a consumer company, whereas in the case of a TCS, Infosys, these are who earn 99% of their revenue. It's dollar-based earnings, and so with the rupee continuing to fall, whatever margins, and their only other input cost is wages of employees, the salaries of employees. So, and demand usually holds up in early cycles of a recession. If it really happens, demand holds up. It's only much later in the cycle they will actually cut. So, if you take all this together, valuations have corrected, demand still remains strong. Uh, and therefore, I think there will be some margin pressure when TCS reports next week. But the order book, I think, for the industry is looking good, and therefore I'll invest.
By any chance, do you feel the current layoffs that are happening in the startup space? They were, by the way, the biggest recruiters over the past couple of years, which has caused that talent crunch. That trend might reverse, and that we could see margins also improve from here. Is that something that you're penciling in?
All the startups and all the Zomatos and the Paytms are in a very different business from a an IT services company.
Okay.
An IT services company is trying to solve, like an Infosys, TCS, HCL Technologies is trying to solve enterprise problems, moving to the cloud, helping corporates become more productive but lowering costs. On the other hand, you have the Paytms and the Zomatos, etc. These are largely trying to increase their wallet share of what a consumer is going to spend. And so, to do that, they've been acquiring companies at higher multiples and therefore, in essence, buying out revenues to deliver growth. Now, that works in an expanding economy, in an economy where there is conflicting signals of whether you're going to grow or is there going to be a recession. In those environments, these high price multiple companies generally don't do that well.
All right. Um, Ashwin, you want to go ahead?
Yeah, I just wanted to. I mean, we're talking about the earnings season, right? I just wanted to, perhaps pick your brains and ask you as to what do you make of the banking sector, private banks? How do you rate them at this space?
I think the biggest thing that I would watch out for is credit growth, because banks are in a very simple business. If you boil down the whole thing, they get in deposits and they turn around and lend it. So the lending credit growth has to accelerate, because that is where the volume of business picks up. And I think one or two examples in the recent past they have not been that encouraging about credit growth. And so until credit growth happens, I think. But the good news is they've cleaned up their NPAs, their bad loans, so their balance sheets are strong. So when we see the economy itself turning up, that's the time I would buy banks. Until then, I would actually still stay away from the frontline banks. Probably buy some of those beaten up smaller banks.
Got that. Thanks for that, Chakri. Yash?
That's interesting, Chakri, because although like Bajaj Finance is not a bank, but then they came out with their Q1 update yesterday post market hours, and the stock also reacted positively, up 4%. Just to give a quick overview of what the update was. So they've given out fresh loans to 74 lakh customers. That's up 61% year on year. Asset under management is up 31% to over 2 lakh crores. Um, and they added a record 27 lakh new customers in Q1. So insane figures, and obviously we saw a positive reaction on Bajaj Finance today. Up 4% was the top gainer on Nifty. But another name which came out with a good Q1 update was Avenue Supermarts, and in the last 3 days it's up 11%. When have you seen that kind of move in Avenue Supermarts, right?
Yeah, indeed. This is actually is a very good observation, and this takes us back to that first point of consumer discretionary will do well. Avenue supermarkets, again, people going out beginning to buy stuff. Bajaj Finance is a consumer facing company.
Hmm.
And you've seen all the numbers that you highlighted. So I think that is what needs some amount of refinement, and rather than I would not just buy banks, but for instance, if you take an ICICI or an Axis, right? It has a good mix of a corporate in it. They have corporate, they have consumer, they have real estate. They have all kinds of stuff going. So you have to pick your more a consumer facing company, consumer facing bank will probably do better in the current cycle. As we go down the cycle, then you can add the other ones.
Are you buying any FMCG names, probably like an ITC or HUL?
Well, the FMCG, not really, because the only thing going for them is they have kind of underperformed in the last couple of years, so maybe it's time for a catch up. But outside of that, what we haven't seen any big product innovation coming out of an FMCG. It's the same old Colgate, it's the same old Surf saying. So where is the higher incremental margin that is going to come? So there again, some amount of uh, rather than buying FMCG, you will say that, hey, look, maybe this company's, Hindustan Lever is already trading at the multiple it trades at. So where is the incremental surprise? So from that perspective, I wouldn't really be overweight FMCG as a space.
And your view on paint sector, maybe? I mean, there was news of Grasim going aggressive in the paint foray, and we saw sharp correction in the likes of Asian Paints, Berger. Obviously, crude not helping, but with yesterday's sharp fall, we saw some bit of recovery in these names. Are paints, and especially Asian Paints at this level, a good buy or a good entry point?
You raised a very interesting point, which is, yeah, there is a certain type of valuation, premium valuation, you would give an Asian Paints, you would give a Berger Paints when they are the only act in town. Until before Grasim came in, JSW came in, and come in with big plans, not small plans. And these are companies with large balance sheets who can come and scale. So, what competition these companies did not have for the last 20, 30, 40 years, suddenly are having it in one bunch. So, secularly, the margin therefore will come down, whether oil prices are high or not. And second, with oil prices being high, their input costs have gone up also. So, you have competition which they never had before, and plus input cost pressure. Therefore, that translates into a lower profit multiple because they will have lower profit margins. So I wouldn't really buy into an Asian Paints or a Berger at this point in time.
All right. Ashwin?
Yeah,
Ashwin, do you want to come in?
yeah. I wanted to just speak.
Ashwin? Okay, I think your audio is not clear. Okay. Uh, we'll wait for him to connect again. But Chakri, that's a pertinent point. I think the biggest hurdle for any new player to enter in the paint sector would be to getting their tinting machines at the dealer shops where basically Asian Paints, Berger, they have a very big head start and have a wide network. So it'll be interesting to see. Obviously, Grassen through its cement business does have some bit of a reach advantage compared to say the other names which have tried to penetrate the space, smaller names like an Indigo or a Shalimar. But you would still probably stay away because of the increasing competitive intensity. And speaking of competition, the last few weeks, the news flow around the aviation sector has been very interesting. How do you see the space, Chakri?
See, aviation as a space is largely around the world has always been a positional investment, a trade, and not really a long term investment. You can't just buy and forget about it. Because an airline company around the world, and India included, have two biggest variables. One is enormous cost of raw material. Buying a plane is very expensive. Second is their second biggest input cost is oil, aviation fuel. Now, they don't have any control. Any aviation company does not have any kind of control whether oil prices at pre-pandemic, just 4 months ago. What pre-pandemic? I'm talking about January, February, pre-war, Ukraine war. Oil was
Hmm.
only about half the price that it is right now. Uh, and third, in a country like India, which is a price-sensitive country, and therefore the airfares cannot be really increased in line with oil prices and other costs, the margins are also at stake. So it is always a positional investment and not one that you buy and forget and come back some 3 or 5 years later and see how they're done.
Check. Am I audible, Yash? Or have I been booted out again?
Yep, all clear.
Chuck, I just wanted to quickly pick your brains on how have you rated the, over the last 1 year, the IPOs that came about in the Indian market, especially of the, the not startup as such. I mean, in the sense the startups which started a while back and, got into the markets. How do you rate their entry and performance?
This IPOs cycle is something which will repeat itself and has done it way in the past. You had the 99 bubble, and then you had the 2003 bubble. You had all kinds of, and so private equity companies will exit when equity markets are doing well. So, but what is the good news is, these are all valuable companies. They are bringing diverse, changing the profit dynamics of the market in itself. If you have an online retailer, it brings down the margins of an offline retailer, and therefore, from that perspective, development of the market, you have more big, huge public companies, increases the depth of the market. So, I think the way we approach it is one does not apply the same multiple, the same outlook in all market conditions. That alacrity of, because terminal values change quite dramatically depending upon market and what's happened in the last couple of years, from pre-pandemic, then pandemic, then a war which has created inflation which is beyond, which was not there on anybody's minds. What does it do? All the consumer-facing IPOs are tech IPOs, uh, and therefore they'll suffer big time because there is no margin protection there. So I think so. It's not about individual companies. It's more about the cycle and picking your stripes, and that's the way it is. That's the way this business works.
Now, just staying with the startups for a moment more, Chakri, how do you rate the valuations that have been coming about I mean, when you're out in the news out here, you hear about, unicorns coming about nearly every fortnight at this point of time. What's your thoughts on these?
The unicorns are doing a phenomenal job in terms of the business models that they're bringing about. So that is clearly a great thing for the economy, great thing for individual companies. Valuations by themselves have also corrected in the last 6 odd months, 3, 4, in the last especially 4, 5 months, 6 months. Yes, valuations have also come down for the unicorns. The present funding rounds are all down fundings, good 40, 50, 50+% down. So it's actually a good thing because there is some, hopefully from an investor perspective, there is there are tough lessons learned. I mean, these lessons were learned in 99 also, but again, such is the human behavior. So I think, yeah, again, whenever the cycle comes back again, I think we will go back and invest again.
Thanks for that, Chakri. A quick heads up to all our listeners. If you have anything that you'd like us to check in with Chakri about, do send Yash or me a DM and we'll bubble up your query. Chakri, you spoke about 99, and one of the things about 99 was the early days of the internet. And there have been lots of parallels that have been drawn upon, between the 95 to 2000 period as the early days of the internet to now, which is the early days of Web3 and cryptocurrencies. And, by and large, what's your sentiment on the crypto and virtual digital asset space?
Digital asset space is here to stay. The valuations have, with India, of course, regulation is still a kind of a gray area in terms of taxation, which is quite punitive, making it less attractive. Uh, Third is again they went through the same dot-com mania
Yeah,
of
indeed.
and which so and when and then if you look at the dot-com mania 99 or any bubble before that, even the tulip bubble probably few hundred years ago.
Few centuries ago, yes.
yeah, yeah, and you read about that. It's the people whose companies who survived out of that a handful. And I think the same thing will happen, which is cryptocurrency is clearly going to be there. But the pace at which people made money and the pace with which people lost money in the last thing will make them, kind of sit by the sidelines for a longer time before they come back again.
Got it. Thanks for that, Chakri. But just one thing, is this space that fascinates you, or is it something that you feel is just a, for the young kids, too much of a fad?
No, I think this is a hugely valuable space because blockchain solves real problems and there is a value associated with that. And now then it's a question of what is the right value,
Right.
and that water will find its own level, but it as a space is a hugely important space.
Got it. Thanks for that. And if you have any queries, once again, do send Yash and me, a quick DM, and we can bubble that up. Yash?
Yeah, I think Ashutosh has already been given the speaker access. Sir, you can go ahead and unmute yourself and ask the question. Okay, I think so. You need to be on your phone. If you have logged in from your computer, you might not be able to, ask the question. In the meantime, if anyone else has
I have
any
a
question,
query that has come in from Room on the Roof, and here's a question for Chakri. Essentially, your large cap and mid cap IT outlook.
The large cap has corrected significantly, down 30-40%. Valuations are now in the low teens to the mid teens multiples. The earnings growth is intact. So I would clearly start buying the large cap IT. In the case of the mid cap IT, the multiples are still higher. So of course, the growth rate is marginally higher. But in the current environment, I would stick with the large cap IT.
Well, Room on the Roof, I hope that answers your query. And I think we did have a listener who was promoted to be a speaker, and I think he's got dropped off. Yash, do you have any more queries lined up on your end?
yeah, there's one question from Shobham on the metal sector, but I guess Chakri has already taken it up. So in case you're still listening in and probably joined late, he is avoiding any commodity names, including these metal companies, for the simple reason that it is very difficult to time these things, and with geopolitical factors behind the whole volatility as well as government move in the past few weeks, it remains an area that he would avoid right now. Before we close, Chakri, one last question from my side, and because we were talking about tech and IPO, a rather uh, early, or rather the most recent IPO of LIC, not from the tech space, hasn't done well. Expectations were high given that it was priced attractively, not on the lines of these tech companies which came at absurd valuations. What would you advise people to do with LIC now?
Now, see, it's a great company with a great franchise with a huge market share. Its valuation is very attractive now, and it's kind of impacted because of the PSU tag that it carries. It's being a government company. A government can restrict its profit margins, which has happened to many companies. ONGC has suffered that fate, and the etc. There are numerous examples, and that, for example, many of the companies, government sector companies, where the profit margins are capped, and so I guess in and hugely uncertain include not just economic conditions, but also, for example, a windfall tax, banning exports. Tomorrow they can regulate the margin of what an LIC type of company can make. I think this is the kind of fear which is holding it back. But I think, it's reached fairly attractive level, so I would definitely start nibbling it.
All right. So probably at these levels is where Chakri is bullish on LIC. And lastly, we have one more question coming in from the from the listeners. Hemant, go ahead and unmute yourself. Hemant, you're on mute.
Yes, yes, I'm there.
All yeah, go ahead.
So, so my question was currently there were so many sectors like AI sector, metaverse sector, like that. But what about your view on green energy sector, sir?
Green energy is a phenomenally attractive sector for the long term. And, it's quite heartening to note that traditional companies like NTPC are going to be the biggest green players if you fast forward 10 odd years out. And individual companies like Ather, or including the automobile companies who are uh, having EV plants. Now, EVs are clearly green energy, part of the green energy solution. And so that is the way I would approach it, rather than it has to be a mix, because both the providers to green technologies and the makers of green technologies like NTPC are the types of are those which will benefit. NTPC is a good example. Greaves Cotton making electric vehicles is a good example. So a portfolio approach there would help.
All right. So I guess that is the last question.
Yep, and it's been a great run. Thanks a ton for this, Chuck. We really appreciate you joining StockTwits and Business Insider India on our weekly chat about all things markets. And it's been a delight chatting with you today. And thanks a lot for your questions as well, whoever all of you who dropped in with on the DMs and came on the session.
Yeah, and
Thanks,
in case
Yash, and
you
thanks, Ashwin.
Yeah, and in
Thank you,
case you
everyone.
guys joined late and missed out any of the answers from Chakri, we highly recommend you go back and listen to this recording. It'll be the first pinned post, so uh, hope that helps.
Yep. Thanks a ton, guys. And quick reminder, tomorrow evening at about the same time, Yash, myself, and Rahul Sanghi will be talking about the cryptocurrency world and the chaos that has been this week. So catch up on all the news out there and read between what this news entails for all of us and your future in this space. So that's tomorrow evening.
Thank you so much, guys. Thanks, Chakri.
Thank
Thank you,
you all.
Chakri.
Thank you.
Cheers, guys. Bye bye. Take care.